Good Saturday morning to you, and welcome to On the Mark. Alongside Mark Pappa, I'm Gary Byron. Mark is the president and CEO of Financial Resources Group. They're based out of Glastonbury, Connecticut. You can find them online, www.f, as in financial, R, as in resources, plan, frplan.com. More importantly, write this phone number down and call it, 860-657-8380. Again, the number is 860-657-8380 because it's the only number that's going to give you a free Roth blueprint. In fact, not only can you not buy this anywhere else, and there's nobody else even offering this to you. So what does this really even mean? Well, we're talking up to 97% increase in wealth. There's, let's see here. There's no out-of-pocket costs. There's no jumping tax brackets. There's no decline in personal balance on conversion. Mark will give you all the details on it. As a matter of fact, I think we should spend some time at the end of the show and kind of go into really detail. And you're going to get this free, and you can't get this anywhere else. And this is what everybody's talking about right now. Mark, good morning. Great to see you.
Hey, good morning, Gary. How are you?
Not too shabby. It's Valentine's Day. You got plans today or tonight, maybe?
Yeah, absolutely.
Good.
Yeah, let's just try to do your best to put on a romantic evening.
Yeah, you got your red shirt on, so that's a good start.
Absolutely.
Me, got blue, so that tells you I'm cold.
That's okay.
Cold, but not cold at heart, my friend.
Yeah, no, I'm excited about today's show.
You got a guest?
We're going to talk about a bunch of different things about some taxes. We're going to talk about Trump accounts. But I also wanted to bring on, given what we've seen in the Bitcoin and the crypto market, I wanted to bring on our local crypto expert. I think he's probably more than a local expert, Manny Rivera.
Manny, great to see you again. You were here last in September.
It's been some time. Yeah,
it's great to see you.
Thank you guys for having me.
We had a lot of positive feedback from your appearance.
Oh, that's fantastic! I love to hear that.
What's different now? I mean, we're only in mid-February,
sure.
but so it wasn't like you were on a year ago, but it wasn't like you were just on a month or two ago neither.
Yeah.
What's changed in the crypto world since September when you were last on with us?
Oh, gosh, it seems like almost a lifetime. So much has happened in that period of time.
Well, crypto, they trade 24/7, right?
24/7.
They don't take a day off, weekends included.
7 days a week, 24 hours a day. And, I think the traditional market is now taking that as we've got a new thing called TradeFi, and that's bringing traditional stocks tokenized on the blockchain where you can trade traditional stocks 24 hours a day, 7 days a week now. And so there's a basket of stocks that you could do that now with, and that's available on most major exchanges. So, that's an improvement since the last time that we chatted. But, man, there's been so much. Walking backwards, let me think here. Clarity Act is probably the big legislation that is kind of pushing forward. That's going to allow, more banks to custody your coins. I have a personal feeling in terms of whether I like that or not. I always like telling my clients and the folks that I coach, that you should be custodying your own assets, essentially. Put it on your own wallet that you own. But essentially, this Clarity Act is going to allow banks to custody your funds. So when you log into your bank account one day, you're going to be able to see a crypto side where your Bitcoin and your stable coins and all your digital assets will be right where your checking and savings account is going to be. So that's going to be, you talk about adaptation and bringing it to the mainstream. We're right there.
Are there more people who have confidence now in cryptocurrency, or is that still an uphill battle of explaining what it is?
I think people are still confused, but I also believe that people are they're seeing it more. There's more authority behind it. There's more, the law is changing for it in terms of how it can be manipulated. Like it's less and less now. We're coming out of the wild, wild west staging, if you will, of crypto. So I think people are starting to gain more confidence in it. When they start to see things like your precious metal markets exploding up, and crypto's right behind it in terms of market cap, which just determines the size of the total assets. It's a baby, and the way the institutions look at it, it's a first in, last out, or last out, first in asset, meaning it's one of the last baskets that they try to bring in, and it's one of the first assets they sell when the market kind of fluctuates and goes crazy. So it makes for a great opportunity when the market is down. If you've not participated in it, those are your chances to get in. And so, yeah, I think confidence is growing. The rails that these things are written on are growing, and they're becoming more and more. And so, yeah, I think the confidence is there.
Well, let me say this. Crypto itself, it's gone down. I thought I saw Bitcoin. I thought I saw, was it XRP? I thought I saw a few go from the mid twos to the high ones.
Yes. So crypto market is always, as you mentioned, it's up and running constantly. And so we're now beginning a Q1 of 26. So last time that we chatted, there's certainly been a fluctuation in price. All-time high in 2025 was 126,000, and we're currently trading around 73,000 now. So quite the fluctuation in price there. However, what most people don't recognize is that in 2017, the last major bull run that this year would be mimicking, we probably had a 35 to 40% correction before going to the next all-time high. So that's kind of where we're at right now. From 126 to 73, we're a little more than 30% down. So that means, again, opportunity. So that's the way I look at it. Don't be scared. I think most people get scared when they put all their eggs in that one basket, and they're trying to get rich overnight, and that's not the way it works.
No.
What I mean?
But people must call you regularly and ask for, well, what should I be doing? Where should I be buying?
Yeah, absolutely. Yeah, I think people they're questions because when they see such a price fluctuation, it scares them.
How does this differ in buying stocks, whether it's from the New York Stock Exchange or NASDAQ? Or I'll even take it one step further. Maybe it's a three-part question. Or if you want to invest in gold and silver.
Sure.
How would you compare this to those?
It's an asset class just like the rest of them. There's going to be price fluctuations. I think one of the major differences is that it's a new asset class, fairly new asset class. It came out in 2009, but now it's starting to really get serious. The way you trade it now, you need certain accounts to trade it on. Institutions are offering different products, ETF products that aren't necessarily direct purchases of the asset. You're buying more of their product that's associated with the asset. But those are, we call them the Magnificent Seven. They're all offering them. The big guys are Fidelity and BlackRock, and all of them are now offering some sort of product. And now, since we've last chatted, you've got Bitcoin ETF, Ethereum ETF, and XRP ETF. Solana's on there, Doge is in the works, Litecoin's in the works. So all of these other assets are coming forth, man, and it's getting pretty exciting.
How do you even know what to recommend to whom? I mean, is this something where people sit down with you and you ask them questions, you get to know them?
Absolutely. Just to be completely transparent, I'm not a licensed advisor or anything like that. My core competency is in programming. I came into this as a programmer, and now I have that's my viewpoint of it. So the monetary aspect of it is fun and it's exciting because you can see things grow. But absolutely, I always tend to tell people start with Bitcoin because that is kind of the king of it all. All the rest of the assets follow.
But it's
Bitcoin.
Also more pricey than the other ones that are being offered because they were the first, right?
Absolutely. It was the first one that was out. Everything else was kind of a rendition of it. And the way I describe it is an asset. Even though it's called cryptocurrency, it should be treated as if you were buying a property or a house. That's the kind of investment that you would treat it like. You're not going to go out to your store and buy bubble gum with your Bitcoin or anything like that. And what most people fail to realize is you don't have to buy a whole Bitcoin. Bitcoin is divided into what we call Satoshis, and you could buy as little as $1 worth or as much as you want, as many Bitcoins as you'd like. You don't have to start with one. You can start with whatever you're comfortable with.
One final question for you before I go to Mark, and I'll bring you back more towards the end of the show. Is this something that they can do on their Fidelity account or their bank account, or do you recommend opening up like a shell dummy account and then going to something like Robinhood and having them, because you can't use your credit card to purchase these shares. You can't transfer money from your. There's a process.
Yeah, there's a process. So the first thing you need is what's called a digital wallet. A digital wallet will allow you to actually secure that coin that you're purchasing.
And where do you get that?
You could download an app. There's two types of wallets. There's hot wallets, which you can put on your phone. That means it's always connected. You're always available to it. There's what's called a cold wallet. Cold wallet is like a USB drive. It's an encrypted special device that allows you to hold all your assets, and it's offline. That's why it's called cold. That's the wallet that I recommend the most. There is a process. You do have to buy it from an exchange, Coinbase, Kraken, Gemini. Then once you purchase it, you want to remove it from that exchange to your cold wallet. You don't ever want to keep it there. In terms of the big boys, the ETFs and Fidelity and things like that, you could buy a product-based ETF. It's not exactly buying the asset itself. It's just buying like a representation of it. And then the company buys the assets on their own, and it's a whole spiel. But I always recommend buy the asset yourself from an exchange, move it from their wallet to your wallet, then treat it like cash. If you lose that drive, it's like if you lost cash, it's gone type of thing. And so there's a whole pile of Bitcoin that has been lost forever. Bitcoin is programmed to only have 21 million Bitcoins that'll ever exist. Of that 21 million, there's around 19 million currently floating in supply. Of that 19 million, roughly 3 million of those coins have been lost forever, either by forgotten passwords, death by user, lost or stolen devices. So you definitely want to keep your device protected.
Talking to Manny Rivera, I want to bring Mark Pappa back into this conversation. You own crypto, right?
Yeah, I own it through a ETF. I own a couple different ones, Ethereum and Bitcoin, and also the XRP.
Yeah,
I'm too lazy to go onto the exchange and put it on my crypto wallet. But one thing that's important, Manny brought up, is losing your crypto by death and not knowing the password. That's why we have our survivor's guide and our 21-point checklist.
You're going to bring
because
that
you're going to put that place, and you're going to tell people where your crypto wallet is, because this is your inheritance, and you're also going to tell them what the password is. You're going to put that in a safe and secure place so that they can access the crypto and make sure your beneficiaries get their inheritance.
I'm so glad that you brought that up. Okay.
Yeah, no, great job, Manny. And Manny knows this inside and out. He is an expert in crypto, and I definitely rely on his advice more than anybody else.
What's on your mind this morning?
Well, Gary, we have a lot of interesting things. First things first, buy low, sell high.
You want to do your disclaimer first thing first?
In a minute, I will, yeah. But, Manny and I did an event on taxes on crypto, on how to. We had a group of people. It was about 25 or 30 people.
Yeah, it was a good conference,
and it was a small conference. We were trying to do a bigger one, but we started small. We did it at what was it, Parkville
Market,
Parkville
West
Market.
Hartford.
West Hartford, yeah.
And that's where I actually got to know Manny, and Manny talked about what he does, and then there was a few other people talking about the blockchain and how one guy made music on the blockchain and was able to get royalties on it, and really cool stuff. And then I actually talked about taxes, and there was a whole group of people in the room where Bitcoin and the market exploded, and everyone made a lot of money trading. And then the market just crashed. It was called the crypto winter. Now they didn't have enough money left to pay the tax. So I got a couple of those people in the audience who are a little bit nervous, but I kind of calmed them down a little bit. And that's kind of what I feel like we are again. It's a volatile asset class, but you know what? Buy low, sell high. Here's the time. You shouldn't be bailing out. And I'm hearing some of these Monday morning quarterbacks on the radio saying, well, we own only a little bit, and we're going to be selling it for our clients on the next bounce because we're geniuses. Well, reality is, let's talk about where you're going to be in 10 years from now. And I think crypto's, I'm long term, I'm bullish. And I think another area that has hurt gold and silver has had such a big run, and it had a big sell off, and we're waiting for that big bounce. But Bitcoin used to trade in parity with that, and Bitcoin is no longer trading as if it were gold or silver anymore. Everyone's just buying gold or silver. So that's the thing.
You're buying high, though.
Yeah, I think fundamentally long term, I would be long term. Take your position, be long term, and don't trade this stuff. Let's see where we go long term.
To that point, crypto is long term.
Absolutely,
just like gold and silver.
The best strategy you could possibly have, at least in this asset class, is the buy and hold. There's
set it and forget it, as they say.
Dollar cost average too. You're a big dollar cost average
absolutely
advocate.
I mean, it's one of those.
That means buy a little bit at a time.
Yeah, there's a case study that shows $30. This gentleman bought $30 Bitcoin every single week for the last 5 years, and it just ended up growing into millions of bucks. And he all he did was put in $30, whatever you could afford. And that's what I tell my clients. It's just you don't start with where you're going to feel uncomfortable with it. Start with a portion of your discretionary income that you are comfortable with it. $30, $50, $100, whatever that may be. It's different for everybody, but continue to buy long term for sure. Absolutely.
Yeah, and keep track of your trades if you do trade, because otherwise your tax guy is going to bill you a lot.
Yeah.
The Trump policy of no tax on tips and Social Security, at least on the federal level, is going to resonate with a lot of people this tax season. However, on the state level, Lamont and the Democrat majority in our legislature are saying not so fast. We're not going to. We're not adapting that policy on the state level.
No, they're going to offer a stimulus check because it's an election year.
Stimulus check.
I think it's terrible that the state isn't adapting it. I can't tell you. I don't think they want to see Trump win the midterm elections. So the more they do, anything they can do to hurt Republicans in the midterms, they're going to do, and that's exactly what's happening. Whether it's wanting to defund ICE, whether it's to want to put less money in people's pockets, whether it's not talking about the extreme positives in this economy, the cuts in deregulation, the tax cuts that have been passed. The no tax on overtime is going to be a huge stimulus to this economy. The no tax on tips is a huge stimulus on this economy. And I actually did some already, and it's what they call the 14-A or line. But you actually you get the last pay stub for of the customer. You get their W-2, and then you have to, in my software, I type in the line, and I pop in the amount of overtime into that box, and then the software will just calculate and exclude that from their income. And I saw one case where this is just your average guy. He's from Pennsylvania, makes $57,000 a year working for FedEx. This is your middle-class worker, your blue-collar middle-class worker. And he had something like $13,000, some big overtime number, about $12,000 and change in overtime, and it gave him another $1,500 in his refund by not taxing this poor guy's overtime. That's a big jump for a guy like that. That's $1,500. That don't go very far for your average person. So, for married couples, it's up to $25,000 that can get excluded, and $12,500 for single. So I think that's going to be a massive stimulus to the economy. Bottom line, that can only help the consumer. That can only help with affordability. That can only help with, I think, the sentiment, the negative sentiment. This economy is a lot better than what is being broadcast. I just think the story needs to be told a little better. The media does not want to see. They want to win the midterm elections. Right. They want to put Democrats in. They want to tax us.
Of course.
They want to spend our money. They want to control your vote. That's the bottom line.
Folks, you are listening to On the Mark, along with Mark Pappa. I'm Gary Byron. We got his very special guest. It's a name I know you'll be familiar with. He was with us back in September. We're talking crypto as well with Manny Rivera. You can contact Mark very easily online at www.frplan.com. He's also, he's in Glastonbury, Connecticut, by the way, Financial Resources Group. And more importantly, I would say use this phone number. He's got something very unique that he's giving away free of charge. You really can't get anywhere else. And the only other person I think is that you might find somewhere in the country, he's selling it. So you'll get it free of charge. I'm talking, of course, of the Roth Blueprint. 860-657-8380. Again, 860-657-8380. I'll have Mark go into the Roth Blueprint more towards the end of the show. You bring up tax season. I'd love to hear your commentary on tax season.
Well, it's just an interesting time. I'm getting a lot of questions about the Trump accounts, Gary.
Let's talk about the Trump accounts.
Let's talk about the Trump accounts because I'm getting a lot of questions on these. And I did a couple weeks ago, did a really deep dive research because I was getting questions on, speaking of Roth blueprints.
Is this a compound interest or something?
Yeah, right. Can we actually convert the Trump account to a Roth when my kid turns 18? So let me talk about the Trump accounts. Let me give you the high-level view. The Trump accounts are tax-advantage investment accounts designed for children under 18. So they were established under the One Big Beautiful Bill Act of 2025. They function like IRAs. IRA stands for Individual Retirement Account for Minors. So you don't get a tax deduction when you put the money in. They're technically non-deductible IRAs, and you put after-tax money into the account so it can grow tax-free. The U.S. Treasury will also match you up to $1,000 when you actually set up this account, and then you can put up to $5,000 in that account. The money gets invested in low-cost U.S. equity index funds. It has to be U.S.-based companies, unfortunately. Well, I say fortunately, but so there's going to be very low fees, and they're designed to build long-term financial security for young people. So eligibility, and so for every U.S. citizen child born between January 1st, 2025 and December 31st, 2028, so that's a 3-year window, with a Social Security number, you qualify for a one-time $1,000 seed contribution from the U.S. Treasury upon account opening. And children born before 2025 but under 18 can also open accounts with the seed money. Now, there's no income restriction for parents. And contributions are up to $5,000 per year. They're going to index it to inflation, not to get too technical. But how do you open one of these things? So the first thing is you can't really do this until after 4th of July of this year.
Oh,
so
good to know.
But you can also, parents or guardians can open the Trump account by submitting IRS Form 4547 when they file their taxes, or using an online portal through participating banks, brokerage firms, or financial advisors. And at age 18, the account converts to a traditional IRA. So, Gary, one of the questions I got was, what's going to happen when my kid's 18? What can he do with the money, or she do with the money? Are they going to get penalized if they take the money out? And when it converts to a traditional IRA, it can be converted to a Roth IRA, but they're going to have to pay tax on the ordinary income on the gains. They're going to have to pay taxes on the gains of the IRA. So that's one of the things that will happen. The principal base, you won't have to pay taxes on the money that you contributed. It's only on the financial gain. And at that point, you actually can convert it to a Roth. Or there's other things you can do. You can actually, again, this is money that I think will grow substantially over time. You can take up to $10,000 of the account, and you can actually use it as a down payment on your home. There's also a backdoor for educational expenses, and God forbid you get laid off. So there's all sorts of exclusions for IRAs that traditional IRAs that you can utilize to avoid a 10% penalty. But, big picture is I would probably, at age 18, start converting this money to Roth and not do any of that.
So do you help people open one? And do you help them? Do you help parents establish Trump accounts?
Yeah,
you've been hearing about Trump accounts.
I'm sure we have a couple newborns and new grandkids in our practice. Obviously, I have clients that are just had children. Or those with ones on the way. We'll be definitely working with them to open these Trump accounts. I think it's a very smart thing to do.
$1,000, and then Dell is going to match that, or
that was the Treasury is going to do the $1,000, and then I think Michael Dell. I don't even know the story. I know it was Michael Dell and Ray Dalio's foundation donated money towards that. So. I don't know what the hooks are on that, but I do know the Treasury will drop the first $1,000 in, and then you can put up to $5,000 into the account yourself. And then grandparents can do that too as a way to gift, right? So, or let's say, here's another thing. Grandparents can gift their grandkids if they're going to pay tax on that conversion. They can actually gift them the money to help them pay the tax to convert that into an IRA. That was a whole other strategy I saw the other day. So everyone's coming up with strategies in order to convert the IRA to a Roth so that it grows for their lifetime. It would probably be prudent if I'm doing conversions at 65, 67, and 68. Imagine doing a Roth conversion at 18. Imagine what that money will grow to by the time you're 65.
My goodness.
Yeah, and that's what people are. When people are saying, "Oh, it's only $1,000," well, those people are small-time thinkers. They need to understand the magic of compound interest.
Well, that's why you're here. I want to bring Manny back into this conversation. Are you strictly crypto, or
I am 99.9% crypto. However, as I mentioned, with what we're calling TradeFi and traditional stocks coming over to the blockchain, I'm very open to investing it in that way because it allows you to use your crypto to purchase traditional stocks. And I think that's incredible. And I think that's going to allow the traditional market to be in that 24/7 because there's just so much volatility. When the market closes come Friday afternoon, you've got 2 days of dead air for the traditional market. Then Monday opens and it creates what's called a gap. And that gap ends up getting filled and that creates volatility. So when it's a 24/7 market, it works for everybody.
Well, it also diversifies your portfolio as well.
Absolutely. It's a great diversifier for sure.
And as one is down, the other one, you can make up for it with something else.
Some of them are inverted and some of them are correlated. Typically going back to the precious metals, around 12 weeks or so after an all-time high in gold, it usually rotates into crypto. So that's what we're looking forward to. That we'll probably see that at the end of Q1, beginning of Q2, with gold going as high as it did, $5,600 per ounce, which is incredible. Silver hitting $112, $120 per. So it's been quite the action.
But can people consult with you, but or no?
Yeah, absolutely. I appreciate that plug. I'm actually just becoming the executive curator of content for CryptoDay1.com, and this is going to be teaching people from the very jump start about blockchain, about crypto, how to trade, how this software works. So CryptoDay1.com, I'm very excited for that partnership. We're going to be rolling that out again at the end of Q1. It's up and running right now, but the content will start flowing end of Q1, beginning of Q2. And so that'll be an educational platform along with a way to access experts like myself.
Is that how you prefer people to reach you through?
Yeah, absolutely. Yeah.
CryptoDay1?
CryptoDay1.com. And then you'll be able to sign up and create accounts and stuff like that.
Mark, I need you to do two quick things before we wrap things up here. I need you to do your disclaimer.
Yeah.
And I need you to talk really briefly about your freebie here that you can't get anywhere else, your Roth Blueprint.
Yeah. All right, Gary. So again, Financial Resources Group is a registered investment advisor located here in the state of Connecticut. Any information that you hear on the show is for educational purposes only. Do not construe this as investment advice. Before you make any investment decisions, please consult a financial professional. Or again, if something on this show caught your attention, please give me a call. We don't mind you just calling in and answer some questions, but do not do this at home, kids.
The Roth Blueprint. It's great advice, actually. This is imperative. If more people knew about this, and the fact that you're giving this away free, your phone should be ringing off the hook.
Yeah, well, it is, Gary. I mean, I can't even. I have a room of 40 people, and I get 60 people almost every time we do an event, and I have to keep inviting them to new events. So the scary thing is the next event is on February 22nd.
There you go.
It fills up so fast, and people come in. They want to learn more about the Roth Blueprint. But the main thing you want to take away is about the Roth Blueprint. One, you can do it with no out-of-pocket costs. So two, without losing principal, and three, you can do it in a way that doesn't jump to new tax brackets. So it's a great way to do it, and you'll have a tax-free retirement thereafter. You'll avoid things like the IRMA. You'll avoid things like the widow's penalty. You'll avoid things like taxes on your Social Security.
And you can get the full presentation at Ruth Chris at your monthly event on the date of...
Yeah. Exactly.
February
22nd. And remember, very, very short window to do this because there's no way we're going to see another, tax cuts this historically low ever again.
All right. Let me give you that number and the website once again for Mark at Financial Resources Group in Glastonbury, www.frplan.com. You want to go to get that steak dinner and listen to the presentation? You want to get your free Roth Blueprint, 860-657-8380. Schedule your consultation with Mark Pappa at 860-657-8380. Thank you to our guest, Manny Rivera, for Mark Pappa. I'm Gary Byron. Thank you so much for listening to On the Mark. Until next Saturday morning, have a good one, everybody. So long.